Hello, today we're going to be looking at the Friday, May 30th, 2025 session for Tesla for trading options using the day trading GPS stocks ETFs Daily Key Levels indicator. Okay, so we have up on the screen a chart of Tesla with 2-minute candles. This is for the Friday, May 30th, 2025 session. The stocks ETFs daily key levels indicator gives you the levels for today's session at approximately 9 a.m. in the morning, 30 minutes before the New York RTH open. So we have the 9:30 open right here on this line. And a good thing to do once you see the levels at 9 a.m. is to also look at a longer time frame to sort of get an idea of the previous day's levels in relationship to today's bull bear KPL. That's the bull bear key price level for today's session, which for this chart is Friday, May 30th, 2025. So we'll go ahead and do that now and look at a 30-minute chart. And here we have the previous couple of sessions during the week. As you can see, this is the same Friday, May 30th chart, just on a 30-minute time frame. So you would have gotten the levels right here on your screen at 9 o'clock, 30 minutes before the open. And as you can see here, we have this area up here from the previous days, which is like between R2 and R3. And we also have this area down here, which is going to S1 to S2 and almost to the mid S2, S3 level from Tuesday. So this range here is what you're looking at for a possible range for today. And obviously if it breaks below out of this previous couple of days range or a break above, then we'd be looking at a move significantly higher or significantly lower. Going back to the 2-minute chart, as you can see, again, the bull bear key level for today's session, Friday, May 30th, 354.62. So at the money would be either a 355 put option or a 355 call option, depending on what the price action is telling us in relationship to the levels. Now you also have to keep in mind the context of what's been happening this week with the Trump tariffs and the court rulings and the continued uncertainty about what's going to happen with that in relationship to the market. So even though the court ruled against Trump earlier in the week, there was a looming possibility that he was going to appeal that to the Supreme Court to try to get it overturned. And there were also some news stories that came out on CNBC about him having 4 other options for reinstilling the tariffs again and getting around the court ruling, even if the Supreme Court rules against him or delayed that ruling. So with that in mind, we were looking at a session where there's going to be possible enhanced volatility in both directions, and obviously the chance of news stories coming out during the day that could flip the market in either direction. So in the context of that, you have to keep your mind open to plays in both directions, which obviously you would do on any given session anyway, but certainly heightened during this session, given what's been going on in the news. Okay, so at the 9:30 open here, which we have marked off, the 9:30 open closes above the bull bear key price level. So right off the bat, if you're inclined to play the open, you would buy a 355 call option here. You would put your stop loss at this mid KPLS1, 352.86, which as you can see is slightly below where this last swing was in the pre-market. So either right here at that or slightly below it, below these candles here. So if you were playing off the open, you would do that. You can also wait for a retest, which obviously sometimes the retest doesn't come. It could certainly keep moving up, and there would be no retest if we were just going to go on a straight trend day. So if you wanted to go ahead and enter here, you would go ahead and do that based on the price opening above the bull bear key price level here and also closing above. As you can see, it would not have hit your stop loss, and you could have added here again at the 940 candle, where after the test it closes back above. Or if you were playing more conservatively and you're more inclined to wait for a retest, then this would have been your first entry. If not, you would have entered here. If you were not scaling in, then obviously you would have just held on to that position since it did not go into the stop loss territory. But if you were scaling in, then you would have added more here. As you can see here, we've moved up to the R2 level at 1020 is the first candle that touches it. It backs off of it slightly, then resurges back above. So your exits would have been here at the R2 level, anywhere starting from 1020 to 10:48 a.m. Okay, so you would have closed out this position here sometime within this time frame here. And I'll go to the option chart here in a second and show you what these figures would have translated into with entries here and or here with an exit here. So you would have been out of this position here, waiting to see where you might get an entry later on for either another long entry or a short entry. But here we have the first sign of weakness at 11:56 a.m. for a possible move back to at least the bull bear KPL. So if you were inclined to be an aggressive entrant for a put option, then you would certainly consider it here, where we had to close below these wicks here. This candle closed below that, so that's the first sign of weakness and acceleration here. The more conservative play would be to wait until it closes below the bull bear key price level, which that happens here at the 12:28 p.m. candle. And as you can see, we have an acceleration of the move as well with this candle. So this is a pretty strong move down with the close below. This would have been your first entry here into the put option if you were playing more conservative. This would have been the first entry here, or if you were looking to scale in, you could have started here and added here. So this is your aggressive entry and our first of a scale. This would be your second entry into a scale here, or like I said, if you were just playing it more conservatively, then you would notice this but wait till here for the close below to enter for the first time for the 355 put option. And as you can see here later at 12:50 p.m. this entry here was at 12:28, so 22 minutes later we have it hitting the S2 level here at 12:50 p.m. and then we have a drop down below here. So this would have been where you would have gotten out at the S2 347.58 around 12:50 p.m. Going back to our longer term chart, As you can see here, this is the 30-minute candles. And as you can see, at the 9:30 open, we had a move back up into this area here from the previous day. And then we have a move back down to test this area here. So that's why it's also important to keep the previous day's candles in context, to look at it on a longer time frame as well, starting at 9 a.m. just to get an idea and have an idea of a possible plan of attack for the day of where price may travel to in relationship to these levels in conjunction and confluence with previous days. Now, I'll go to a screenshot of these various options. This is the 355 call option. I've got it marked off here, the 9:30 to 9:31 candle here. So this would have been the initial candle that opened above. As you can see, the entry was anywhere from $4.30 to $4.77, and then we have the 9:40 candle here, which was where price went back up after the retest here. Price closed back above the bull bear key price level after testing it here. That entry would have been anywhere from 324 to 380. So if you were the more conservative waiting for a retest, this would have been your initial entry here. If you were an aggressive trader and going right from the open, this would have been your entry here. And if you were the type to scale in, then you would have added here. As we talked about, it hit the R2 level at 10:20 a.m. At that time, that would be here. And the 355 call option was $7.21. And as we talked about, you basically had from 10:20, let's go back to the chart here, 10:20 through 10:48 was the initial surge here. Of course, we also have this part here, which lasts to 11:06. But getting out here, you would have gotten out somewhere in here because we hit R2. This is just showing you what happened afterwards as far as going to the high of the session. But getting out here would have been anywhere from 10:20 to 10:48. Going back to here, you have 10:20, 7:21. At 10:36, it was 8:13. This is the high, which shows you at 11:06.9. So basically anywhere from around $7 to $8 after getting in either at 430 to 477 or 324 to 380. So this position would have been closed out here. The entry was either here and or here. Now let's look at the put option. Again, the first sign of weakness, 11:58. The more conservative play after it closes, accelerates below the bull bear key price level, 12:28. So 11:56 and 12:28. Here's the 11:56, the early warning sign. At that time, the 355 put option was anywhere from 69 cents to 93 cents, depending on where you got in there. If you were going for the aggressive play, going for the more standard acceleration and close below the bull bear key price level, that happened at 12:28 p.m. and the entry would have been anywhere from 185 to 288. Going back to the chart, here we have it hits the S2 level at 12:50 p.m. So at 12:50 p.m. it hits the S2 level, and the 355 put option is 703 to 855. Now we did see a move slightly below that. You would have gotten out here. If you hesitated and gotten out later, then you could have gotten a little bit more as it moved down, but this is where you would have gotten out at the S2 level. So anywhere from 703 to 855 is where you would have gotten out after entering either the conservative entry at 185 to 288, or if you took the more aggressive early warning, then from 69 to 93. Okay, so keep in mind that on these sorts of days, this is a Friday, so with stocks like Tesla, they don't have expiration dates every day like you do in the SPY or the QQQ or the XPX. So the expirations are every Friday. So since this was a Friday, these are also 0 DTE options. So they're going to be a lot more volatile on days like today as far as the price moves of the option because there's no more time left and it expires at 4 p.m. on the same day. So that's why it's a good thing to get out when it first hits these levels. Obviously, it's hard to time exact tops and bottoms, but just using these levels as a guide of profit taking and entries. Okay, so again, keep in mind that these were 0 DTE options. Another thing that you can also keep in mind is that on Fridays, let's say you had already closed out this position here and you had a nice profit from this move here, and you were looking for another possible entry. Keep in mind that a lot of times, unless it's going to be a complete trend day, that you will oftentimes get a retrace back to the bull bear key price level. So the point that I'm trying to make is that, let me grab this. The point I'm trying to make is when Tesla was near the high of the day, this 355 put option was 40 cents. So if you were so inclined to take a lotto play on Tesla for the day, and like I said, if you already had a significant amount of profit from this move here, this long trade here, that at this time here, 1106, in this range here, this 355 put option was 40 to 45 cents. So if you were inclined to take a lotto play, you could have gotten in extremely early here for a possible move back down. Again, we're talking about 1104, 1106 to 1108. We'll bring this back here. So that's in this range here. So basically you have 40-45 cents of risk for a possible reversal move. If you already had several dollars of profit from the other long play earlier in the morning, and you were so inclined to take a chance on a lotto play, considering this is a Friday, then you could have bought one or more of these options here with some of your profits just to see what happens, because basically your downside is, like I said, only 40 to 45 cents, which on every option contract would have been, if you bought one option contract here, would have been $40 at the low, let's say it was 50 cents, then it would have been $50. But the point is, as you can see here, this moved all the way back up to $10. So this would have been a 20x to 25x play if, of course, you had held on the entire way. But if you were so inclined to say buy 5 or 10 of these, then another thing is that you could have waited until this doubled. So as you can see here, here's a dollar right here. These did double shortly thereafter. You could have sold half of them here, gotten all your money back, and just let it ride the rest of the day to see what happens. And in this case, you would have made a substantial amount of profit. And if you had done it that way with multiple contracts and selling half or more after it doubles, then you could be in a risk-free position to just basically see what happens. And of course, at the end of the day, we also had a big move up again, and it closed near 9. So as you can see, we had a move up here to 10. It moved back all the way, down to about 3, and then at the end of the day, we had a sell-off, and it moved back up to 9. So that's just some things to keep in mind on Friday option plays. If you already have a substantial amount of profits from plays earlier in the session, Fridays can provide some pretty good lotto opportunities if you're willing to take a chance. And like I said, if you're in this mode here and you see some weakness starting, then it didn't take much of a move for these to double. So we're talking about 11 a.m. to say 11:08 here. So basically around 11:20, 11:22, it had already doubled. So that's just a move back down to the mid R1, R2. So basically from here down to here, those options doubled. So you could have, like I said, sold half or more here when it doubled, then be in a risk-free position to see what happens the rest of the afternoon. So worst case scenario, if you held on, you had the multiple contracts, it doubles, you sell half or more, you've now gotten all your money back or locked in at least some profit. The rest of it is a risk-free runner. If it moves back up and keeps going, then you really haven't lost anything or you made a small profit. On the other hand, if you get a reversal move back down like we did in this case, then you can make an extreme amount of profit. Okay, so I hope you've enjoyed this video. Keep in mind that if you're not already a subscriber to the Day Trading GPS Stocks ETFS Daily Key Levels indicator, it's available in 2 different versions, either the indicator by itself or the indicator as a suite, which also includes 3 additional indicators: our dynamic anchored VWAP, KPL navigator, our order block finder, and also our supply, demand, and equilibrium indicator. The Stocks ETF's Daily Key Levels indicator is also part of our Day Trading GPS Gold Indicator Suite, which includes 8 different premium trading view indicators, including 5 daily key levels indicators, 1 for stocks ETFs, 1 for Forex crypto, 1 for futures CFDs, 1 for the XPX index, and 1 for the NASDAQ NDX index. And then also the dynamic anchored VWAP KPL navigator, the order block finder, and supply, demand, equilibrium zone indicator. Also, with a lifetime access subscription to the Day Trading GPS Gold Indicator Suite, you also, if you want to consider lifetime access instead of a monthly access or annual access, the lifetime access to the Day Trading GPS Gold Indicator Suite also includes the additional benefit that as we release new TradingView indicators in the future, then you will be able to have lifetime access to any new indicators at no additional charge. And then also we're planning on releasing a series of robot auto traders for TradingView later this year, and you will also be entitled with the lifetime access plan to receive those auto trader strategies at no additional cost either. So that's one advantage of the lifetime access plan for the Gold Indicator Suite over just the monthly or annual plan. If you have any questions regarding the indicators or subscribing to the indicators, then you can either send us a DM through our Twitter at daytradinggps, or you can send us an email at daytradinggps@gmail.com. Thank you, and we wish you good luck and prosper in your future trading. Thank you.